Hello, this is Nataraj Upadhyaya. Welcome to a special mutual fund performance analysis report in the context of a huge correction that happened yesterday on June 4th due to Lakasabha election results. Basically, the exit polls on June 3rd projected a very rosy picture for NDA to return with approximately 350 seats, but actually NDA now needs to be satisfied by around 292 seats, and BJP cannot form a government without coalition with its partners. Therefore, market is spooked, and there has been a significant correction. However, since NDA is returning to government, the market is expected to recover over a period slowly. So, from a mutual fund investment perspective, this may be a good opportunity. Personally, I find that whatever we should consider investing through next 1 month up to the budget season, I would consider 40% of the investment going right away, because I feel fairly confident that the market will not be spooked further, though there could be 1 or 2 days of further correction. But mutual fund investment, what happens is, in my case especially, when I put an investment, it takes a minimum of 1 day or sometimes 2 days. So I'm okay to balance whatever will happen in next 1 or 2 days. Hence, this report is primarily to consider that immediate investment based on the significant correction that happened. So let me get into the details. So first, let us look at the averages of mutual funds after this corrections. You could see that there has been a significant correction of bottom 50 funds, corrected by 6.32% for the week so far. That is last 7 days. Top 50 funds based on 1 year corrected by 3.9%. Basically, the leaders of 1 year performance had to go through correction. But if you look at the top 50 based on 1 month return, had seen very little correction. So there are some leaders who have survived this correction, is the point here. Equity funds, if you notice, equity funds actually top 50 are above zero, positive for the last 1 week. Bottom ones are minus 3.9, and entire equity fund space is minus 4.02, which is worse than the overall mutual fund space, which includes other fund types other than equity. Now, I am not going to focus on debt funds in this report. Hybrid funds, again, top 50 stayed above zero, but 1 year return leaders have corrected here also, and overall, all the overall 218 funds average also is negative. I'm not again getting into commodity because this will be covered in weekly report, but you could see that commodities are also going through a correction. So, how to come out with the recommendations for new investments? I have used 3 methods here. The first method is based on average return across 1 week to 1 year. Since there has been a significant correction through last 1 week, let us account that also, so that the performance consistency across all timelines are considered. So when I do that, I do find some winners here. If you notice, out of the top 50 funds based on this average return across 1 week to 1 year, the ones that have consistent returns, sorry, I don't talk about consistent returns here, the ones that have above average return across these timelines are marked in green here. They are HDFC Defense Fund, CPSE ETF, Invesco India PSU Equity Fund, SBI PSU Fund, Aditya Birla Sun Life PSU Equity Fund, ICICI Prudential Nifty PSU Bank ETF, Nippon India ETF Nifty PSU Bank, Franklin India Opportunities Fund, Nippon India Nifty Next 50 Junior Bs, DSP Natural Resources and New Energy Fund. If you look at it, all these funds have not gone below zero in terms of returns through last week. So that is a good sign. And their annual returns are pretty good, starting from 127, and maybe it will go down to 64. So these are the funds I would feel very safe to further invest on them. The key themes here: PSU and PSU Bank and defense fund. So you don't see the regular infrastructure concept here. So that is the clarity I wanted to establish here. So let us go to the second method, which is based on top 1 month return. So again, choose the top 50 and mark the returns that are above average, and only those which have consistent above average return from 1 month to 1 year are marked in green, like in any weekly report I perform. Here, three funds come up: HDFC Defense Fund, UNESCO India PSC Equity Fund, and CPSC ETF. They seem to be comfortable to invest. And if you notice, all the three ones which are marked in green are also positive, have positive returns for the week. So hence, they have remained a leader. Now, it is also good to look at the bottom 50 based on 1 month return. This is for not investment consideration. It is only to see what kind of funds have underperformed to the extent of hitting our portfolio. You will see a lot of good funds here. Let me highlight some of the annual leaders here. Motilal Oswal S&P BSE Enhanced Value ETF has corrected by 8.96%, though its annual return is 8.50. This Kotak Nifty PSU Bank ETF has corrected significantly. Then let me see any other annual leader here. ICICI Prudential PSU Equity Fund has corrected, and so this gives you an idea that which kind of funds have done badly. So these are all mostly equity funds. So so this only gives more credibility to the leaders report I have discussed so far. So there have been a lot of funds which have been impacted significantly. Another discussion is only to consider equity. So if you consider only equity based on 1 month return, we will see these funds marked in green have shown consistent return for timelines 1 month to 1 year. Now, in this list, only one fund has some negative, minor negative return for the week, which is ICICI Prudential Innovation Fund, but it's still considered investment worthy. The list is HDFC Defense Fund, UNESCO India PSC Equity Fund, CPSC ETF, Quant PSC Fund, SBI PSC Fund, Aditya Birla Sun Life PSC Equity Fund, HDFC Nifty PSU Bank ETF, ICICI Prudential Nifty PSU Bank ETF, DSV Nifty PSU Bank ETF, Nippon India ETF Nifty PSU Bank BEES, Franklin India Opportunities Fund, DSP Natural Resources and New Energy Fund, ICICI Prudential Innovation Fund, Nippon India Nifty Next 50 Junior BEES. So there is some overlap with the first method we saw. So that means it's more reassuring. Here again, the annual returns vary from 127 all the way down to 64. So this is, from my perspective, one can be comfortable to invest at this stage. Now, let us look at hybrid funds. There is a churn out in leadership of hybrid funds. Hybrid funds, again, the ones that made it to the list of investment, all have positive returns for the week. And they are Aditya Birla Sun Life Multi-Index Fund of Fund, Kotak Multi-Asset Allocator Fund of Fund, Tata Multi-Asset Opportunities Fund, Aditya Birla Sun Life Financial Planning Fund of Fund, Aditya Birla Sun Life Asset Allocator Fund of Fund, Nippon India Multi-Asset Fund, Motilal Oswal Asset Allocation Passive Fund of Fund, Aditya Birla Sun Life Financial Planning Fund of Fund, HSBC Managed Solutions India Growth, DSP Multi-Asset Allocation Fund, Franklin India Dynamic Asset Allocation Fund of Funds, HSBC Managed Solutions India Moderate, ICICI Prudential Multi-Asset Fund, SBI Magnum Children's Benefit Fund Investment Plan, Motilal Oswal Asset Allocation Passive Fund of Fund, Aditya Birla Sun Life Financial Planning FOF, SBI Balanced Advantage Fund, White Oak Capital Multi-Asset Allocation Fund, PGIM India Hybrid Equity Fund. Their annual return varies from 38 all the way down to probably 20%. So this is if something you want to do on in a hybrid funds. So that completes the method 2. Now method 3 is looking at 1-year return leaders, and within that choosing the consistent performance from 1 month to 1 year. That way the risk is balanced. Again, the list here contains for investment CPSE ETF, HDFC Defense Fund, UNESCO India PSE Equity Fund, SBI PSU Fund, Aditya Birla Sun Life PSE Equity Fund, ICICI Prudential Nifty PSU Bank ETF, Nippon India ETF Nifty PSU Bank VIS. Among all these marked in green, all of them have remained positive for the last 1 week. So that is for the reassuring. Annual return is anywhere between 133 all the way down to 95. Now, hybrid top 50 based on 1-year return. Since there is a churn out in hybrid funds leadership, there is a different list that's coming up. In fact, if you notice, the top few have negative returns for the week. Therefore, the ones that made are Aditya Birla Sun Life Multi-Index FOF, SBI Magnum Children's Benefit Fund Investment Plan, Nippon India Multi-Asset Fund, ICICI Prudential Multi-Asset Fund, Aditya Birla Sun Life Financial Planning FOF, Aditya Birla Sun Life Asset Allocator FOF, Kotak Multi-Asset Allocator FOF, HSBC Managed Solutions India Growth. And almost all these marked in green have been positive for the week, and their annual returns is from around 38.14 all the way down to 31.79. So that gives you enough choices, whether it is equity or hybrid, to make fresh investments, which will have a much lesser risk in the near future. So that comes to the end of this special bulletin. I wish you best returns for all your investments. And one caution is that this report is only for fresh investments. When it comes to sell decision, one should not rush. I would say that whatever correction might have impacted your funds, please hold until the budget season, which comes in July. Only after that you will get a clarity of sustained underperformance for certain funds, and those funds you can sell at that time, is my suggestion. So with this, I am coming to an end. I see you again this weekend, and thank you for your time.